If you've never bought a home before, you may be surprised at just how much money gets paid besides the down payment. For instance, you'll buy a policy of title insurance. This is to protect your ownership in the property if there ever turns out to be a cloud on the title. The policy lasts for as long as you own the home, and the cost is based on the purchase price. If you have a mortgage, the lender will require an additional extended policy. For a $300,000 property, your total premium will be around $1,800. You'll also pay an escrow fee. That covers the person, usually at a title company, who coordinates all the paperwork and people in your transaction. For that $300,000 property, you'll pay around $750. There are recording, notary, appraisal, lender underwriting, and processing fees. You may also decide to pay a percentage of the loan amount called points to reduce your interest rate. All these items I've mentioned fall into the category of non-recurring closing costs. This means they are charged only once. There is another category of closing costs called prorations and prepaids. This would be your first year's homeowner's insurance premium, prorated interest and property taxes, and the initial deposit to your escrow account for taxes and insurance. Now, this can all add up to a large number. Even though you may be making a down payment of, say, $15,000, closing costs could easily add another $10,000 or more to that figure needed to complete your purchase. Now, there is nothing wrong with asking the seller to pay some or all of these closing costs for you. Depending on the loan program, it may be possible for the seller to credit up to 6% of the purchase price to help you with some or all of your closing costs. You shouldn't be shy about asking the seller for things, especially if your cash is limited. Just remember that the money he credits you comes out of his bottom line, so you're actually paying a slightly higher price for the property in this kind of situation. There are some creative things you can do when the seller is willing to give you a credit. If you're buying a townhome or condo, you could ask them to pay your homeowners association dues for 2 years. Not only will your monthly payment be lower, but it will help you with qualifying for the loan. You could ask the seller to pay 2 points, 2% of the loan amount, to buy the rate down, 0.5%. On a $400,000 loan, that will drop your monthly payment by about $130 a month. You may also be able to get a rebate from the lender. Depending on the interest rate you select, you may be able to get 2% of the loan amount or more in exchange for a slightly higher interest rate. In many cases, that rebate from the lender could cover all your closing costs. I talk about this in more detail in a later video. I hope this was useful for you. Remember, we are never too busy to answer your questions. All my contact information is right here, and if you want to start an application now, just drop us a line or give us a call. Bye for now.